Question 1. Which of the following best describes the primary purpose of cyber insurance for businesses? A. To provide financial protection against system downtimes and loss of reputation only. B. To manage the financial impact of cyber risks, including data breaches, ransomware, and business interruption. C. To replace all financial losses incurred due to data breaches and security incidents without limitations. D. To only cover the costs of physical hardware damage due to cyber attacks. Answer B. Explanation. Cyber insurance primarily helps businesses manage the financial consequences of various cyber risks, including data breaches, ransomware, and business interruptions. It is designed to address the specific financial impact caused by cyber events, not just system downtimes or hardware damage. While policies may cover these aspects, their main objective is broader financial protection for cyber-related incidents. Option is incomplete as it omits other risks covered by cyber insurance. Option C is incorrect because cyber insurance policies have exclusions, including limitations based on policy terms. Option D is incorrect as cyber insurance generally does not cover physical hardware damage, which is often covered under property insurance. Question 2, scenario-based. Mr. Thompson is the IT director of a mid-sized company in North Dakota. His company has recently experienced a ransomware attack and customer data was compromised. The company holds a cyber insurance policy. What should Mr. Thompson do first after the breach is identified? A. Start paying the ransom to prevent further damage. B. Immediately inform the insurance company and begin documentation of the breach for claims. C. Immediately shut down all company systems to prevent further attacks. D. Ignore the incident and continue business operations as usual until the company assesses the financial impact. Answer B. Explanation. The correct first step in this scenario is to inform the insurance company as soon as the breach is identified as per the policy's claims filing procedure. This is crucial for initiating coverage and starting the claims process. Documentation of the breach is also essential as it supports the claim and outlines the extent of the incident. According to North Dakota's cybersecurity regulations, businesses are required to notify relevant parties, including insurance providers, when a breach occurs. Option A is incorrect because paying the ransom is not advised without consulting legal and cybersecurity experts, and the insurance provider should be involved before making any payment decisions. Option C is not necessarily the first step, as shutting down systems could be part of an incident response plan but should not be done without assessing the situation. Option D is inappropriate as ignoring the breach could result in non-compliance with regulations and the insurance policy's notification clauses. Question 3. Which of the following is a critical aspect that cyber insurance policies evaluate during underwriting? A. The insured's physical security measures such as locks and alarms. B. The level of cybersecurity implemented by the insured, including firewalls, encryption, and multi-factor authentication (MFA). C. The total number of employees working in the insured organization. D. The company's previous claims history for property damage unrelated to cyber incidents. Answer B. Explanation. When underwriting cyber insurance policies, insurers focus heavily on the insured's cybersecurity posture, including measures such as firewalls, encryption, and multi-factor authentication (MFA). These are key factors in assessing the risk exposure and determining the premium. Insurers also evaluate compliance with relevant cybersecurity frameworks like NIST and ISO 27001. Option A, while important for general insurance, is less relevant to cyber insurance underwriting, which focuses on digital security. Option C is not directly related to cybersecurity risk. While employee training is important, the number of employees alone is not a determining factor in underwriting. Option D is incorrect because cyber insurance focuses on cyber-related claims, not on property damage unrelated to cyber incidents. Question 4. Which of the following is an example of a first-party cyber insurance coverage? A. Coverage for the costs of defending against a lawsuit filed by a third party after a data breach. B. Coverage for business interruption losses due to a ransomware attack. C. Coverage for fines imposed for failing to comply with GDPR regulations. D. Coverage for the third-party vendor's data breach affecting your organization's network. Answer B. Explanation. First-party coverage in cyber insurance refers to protection for the insured's own losses, including business interruption, costs of data recovery, and reputational damage. Business interruption due to a ransomware attack is a typical example of first-party coverage. Option A refers to third-party liability coverage, which is designed to cover claims made against the insured by others. Option C also refers to a third-party regulatory penalty, and while important, it is not covered under first-party insurance. Option D is an example of third-party coverage as it relates to a vendor's breach affecting the insured. Question 5. Scenario-based. Mrs. Williams works as the compliance officer for a financial institution in North Dakota. Her organization recently experienced a breach that exposed customer financial data. After securing the network and notifying affected customers, Mrs. Williams must now submit a claim for data breach costs under the company's cyber insurance policy. Which of the following is the first step in the claims filing process? A. Begin paying any fines associated with the breach immediately. B. Collect the necessary documentation such as breach details, evidence, and affected parties. C. Immediately notify all regulatory bodies about the breach without delay. D. Wait for the insurance company to conduct an investigation before taking any actions. Answer. B. Explanation. The first step in the claims filing process is to collect necessary documentation regarding the breach, including breach details, evidence, and affected parties. This documentation supports the claim and is essential for the insurance company's review. Mrs. Williams should document everything thoroughly before moving forward with filing the claim. Option is not the correct first step, as paying fines or penalties should not occur until the insurance company and legal advisors are consulted. Option C is necessary, but not the first step in filing a claim. A notification to regulators comes after documentation and filing. Option D is incorrect because an organization is responsible for acting promptly to contain and document the incident, while the insurer's investigation is part of the claims process. Question 6. Which cybersecurity best practice helps mitigate the risk of an insider threat in an organization? A. Implementing multi-factor authentication (MFA) for external access only. B. Conducting regular cybersecurity awareness training for all employees. C. Disabling email services for employees who work remotely. D. Limiting access to encrypted data to only the IT department. Answer. B. Explanation. Regular cybersecurity awareness training is a key practice for mitigating the risk of insider threats. By educating employees on the potential threats, proper data handling, and identifying suspicious behavior, companies reduce the likelihood of insider incidents. Option A is a good practice for external threats but does not specifically address insider threats. Option C is a drastic measure and not an effective strategy to mitigate insider threats. Option D is incorrect because while restricting access is useful, it is not sufficient to prevent insider threats. Employee awareness and monitoring are equally important. Question 7. What is one of the primary responsibilities of the North Dakota Department of Insurance concerning cyber insurance? A. Setting premiums for all cyber insurance policies sold in the state. B. Ensuring that insurance companies comply with national cybersecurity regulations. C. Reviewing and approving all cyber insurance claims before payments are made. D. Regulating and overseeing the licensing of insurance providers offering cyber insurance policies in North Dakota. Answer. D. Explanation. The primary responsibility of the North Dakota Department of Insurance concerning cyber insurance is regulating and overseeing the licensing of insurance providers that offer cyber insurance policies in the state. This includes ensuring that the insurers meet the necessary standards to operate within the state. Option A is incorrect because setting premiums is generally the responsibility of individual insurers, not the state. Option B is important but typically falls under federal regulations, not the specific role of state insurance departments. Option C is incorrect because insurance claims are handled by the insurers themselves with oversight from regulatory bodies. Question 8. Which of the following is a key factor that could affect the premium of a cyber insurance policy for a healthcare organization? A. The size of the organization's physical office space. B. The strength of the organization's data encryption and security protocols. C. The average number of years the company has been in business. D. The type of office furniture the company uses in its IT department. Answer. B. Explanation. The strength of the organization's data encryption and security protocols is a key factor in determining the premium for cyber insurance, especially for industries like healthcare, which handle sensitive personal information. Strong cybersecurity measures reduce the likelihood of a breach, which directly impacts the risk profile and consequently the premium. Option A. The size of the office is not relevant to the premium calculation in cyber insurance. Option C might have a minor influence, but it is not as significant as cybersecurity practices. Option D, the type of office furniture is irrelevant to cyber insurance pricing. Question 9. Which of the following is typically covered under cyber insurance policy exclusions? A. Financial losses due to a data breach caused by human error. B. Damages resulting from a physical break-in to a company's data center. C. Costs related to the recovery of data from cloud-based storage systems. D. Legal costs for defending against lawsuits arising from data breach claims. Answer A. Explanation. Many cyber insurance policies exclude financial losses caused by human error, especially in cases where it involves negligence, such as failure to apply security updates or mishandling sensitive data. Insurers often include exclusions for human error in the policy to limit coverage for such incidents. Option B is incorrect because physical break-ins to data centers are generally covered by property insurance, not cyber insurance. Options C and D are both examples of costs typically covered by cyber insurance policies as they relate to data recovery and legal defense against breach claims. Question 10. What does the National Institute of Standards and Technology NIST cybersecurity framework primarily focus on for businesses in the context of cyber insurance? A. Providing detailed rules for insurance companies to determine premiums. B. Establishing a set of guidelines to help businesses manage cybersecurity risks. C. Offering direct coverage for cybersecurity incidents that exceed policy limits. D. Regulating insurance claims related to cyber incidents at the federal level. Answer B. Explanation. The NIST cybersecurity framework provides guidelines to help businesses assess and manage their cybersecurity risks. It includes steps for identifying, protecting, detecting, responding to, and recovering from cybersecurity threats, which can significantly affect a business's risk profile for cyber insurance purposes. Option A is incorrect because NIST does not set rules for determining premiums, which are based on risk assessments and other factors. Option C is incorrect as NIST does not provide insurance coverage. Option D is incorrect because while NIST's guidelines influence policy and practices, they do not regulate claims at the federal level. Question 11. Which of the following is most likely to trigger a cyber insurance claim for a company in North Dakota? A. A physical theft of office equipment from the company headquarters. B. A system outage due to routine maintenance of a third-party service provider. C. A ransomware attack that encrypts the company's sensitive data and demands payment. D. A legal settlement from a data privacy lawsuit unrelated to a breach. Answer C. Explanation. A ransomware attack that encrypts data and demands payment is a typical trigger for a cyber insurance claim. Cyber insurance generally covers incidents like ransomware attacks that result in data loss, system downtime, or financial costs related to recovery. Option A refers to theft of physical property, which would be covered under property insurance, not cyber insurance. Option B is a result of routine business operations and does not trigger a cyber claim. Option D may involve legal costs but is not directly tied to a cybersecurity incident. Question 12, scenario-based. An insurance company in North Dakota is reviewing a cyber insurance policy renewal. The company has recently implemented stronger access controls, including multi-factor authentication (MFA) and encryption for all sensitive data. How will these security improvements likely affect the premium for the company's cyber insurance policy? A. The premium will increase due to higher risk associated with the company's growing infrastructure. B. The premium will decrease due to a low risk of data breaches and system compromise. C. The premium will remain the same since these improvements don't impact risk assessment. D. The premium will decrease only if the company also improves physical security protocols. Answer B. Explanation. Implementing stronger access controls, such as MFA and encryption, decreases the risk of data breaches and system compromise, which reduces the likelihood of a claim. Insurers typically offer low premiums to companies that demonstrate improved cybersecurity practices. Option A is incorrect because improved security reduces risk, which lowers the premium. Option C is incorrect because stronger security measures directly affect the risk profile and may lead to a lower premium. Option D is not required for a reduction in premium as cybersecurity improvements are the main factor. Question 13. What is the primary purpose of a cyber risk assessment for a business seeking cyber insurance coverage? A. To determine the maximum policy limit that should be applied to a policy. B. To identify and quantify potential vulnerabilities and threats to the business's data. C. To set the premium rate for the insurance policy based on the company's size. D. To estimate the number of employees who may need cybersecurity training. Answer B. Explanation. A cyber risk assessment identifies and quantifies the potential vulnerabilities and threats to a business's data, helping insurers assess the risk and tailor the coverage. This is a key part of the underwriting process. Option A is incorrect because the risk assessment influences coverage terms, but not directly the maximum policy limit. Option C is incorrect because the risk assessment focuses on identifying vulnerabilities, not just the company's size. Option D is unrelated to the insurance process, though employee training is important. Question 14. Which of the following activities would most likely be covered under a cyber insurance policy as a business interruption clause? A. A company's website goes down due to a denial of service attack, causing the business to lose revenue for 2 days. B. An employee causes an accidental data leak while working remotely, exposing sensitive data. C. A competitor sues the company for unfair business practices related to a data breach. D. A company's cloud service provider suffers an outage unrelated to a cyber event affecting operations. Answer A. Explanation. Business interruption coverage under cyber insurance typically covers revenue losses due to downtime caused by cyber incidents, such as a denial of service attack that disrupts a company's ability to operate. Option B is a data breach incident, which would be covered under different clauses. Option C relates to legal liability, which may fall under liability coverage, not business interruption. Option D is an outage caused by a third party, typically not covered under business interruption unless it's directly caused by a cyber event. Question 15. What is the main advantage of adding a cyber extortion endorsement to a cyber insurance policy? A. It covers legal fees associated with defending against a data breach lawsuit. B. It provides coverage for expenses related to negotiating with cyber criminals demanding payment. C. It covers the physical security of the business's IT infrastructure. D. It protects the business from identity theft incidents affecting employees. Answer B. Explanation. A cyber extortion endorsement typically covers the expenses related to negotiating with cyber criminals who demand payment, such as in cases of ransomware attacks. This endorsement is designed to assist businesses in managing the financial burden of dealing with extortion demands. Option A refers to coverage for legal fees, which may be covered under liability insurance, not an extortion endorsement. Option C relates to physical security, which is not covered by cyber extortion endorsements. Option D focuses on personal identity theft, which is not typically covered under a cyber extortion endorsement. Question 16, scenario-based. A North Dakota-based e-commerce business has recently experienced a data breach exposing its customers' payment card information. The company's cyber insurance policy includes coverage for data breach notification, legal fees, and credit monitoring. The business now needs to notify affected customers. Which of the following should be the first action taken according to the policy's guidelines? A. Begin credit monitoring for all affected customers. B. Notify the insurance provider to start the claims process. C. Immediately issue public apologies to the customers. D. Pay the legal fees to settle potential lawsuits. Answer B. Explanation. The first action that should be taken is notifying the insurance provider to start the claims process. Most policies require the insured to inform the insurer as soon as possible after a breach occurs. This allows the insurer to provide guidance and start covering the costs associated with the breach. Option A may be necessary but comes after contacting the insurer. Option C, issuing public apologies, is part of reputation management but not the immediate next step for an insurance claim. Option D is premature without first consulting the insurer. Question 17. Which of the following would be considered as third-party liability coverage under a cyber insurance policy? A. Coverage for the costs of hiring forensic experts to investigate a data breach. B. Coverage for lost income due to system downtime caused by a cyber attack. C. Coverage for a lawsuit filed by a customer whose data was compromised during a breach. D. Coverage for the costs of repairing hardware damaged during a ransomware attack. Answer C. Explanation. Third-party liability coverage under a cyber insurance policy covers claims made against the insured by third parties such as customers or clients. If a customer files a lawsuit because their data was compromised in a breach, this coverage would apply. Option A refers to first-party coverage for the business itself, such as costs for investigating the breach. Option B is first-party coverage for lost income, and Option D covers property damage, which typically falls under a separate property insurance policy. Question 18. Which of the following best describes data breach liability coverage under a cyber insurance policy? A. It covers damages resulting from a cyber attack that disrupts a company's operations. B. It covers the cost of hiring public relations experts to manage the reputation after a breach. C. It covers costs related to defending and settling lawsuits due to a data breach. D. It covers the expenses of rebuilding a company's IT infrastructure after a cyber attack. Answer: C. Explanation. Data breach liability coverage is designed to cover the costs of defending and settling lawsuits that arise due to a data breach, such as claims made by customers or regulators. Option A refers to business interruption coverage. Option B is related to reputation management, but data breach liability coverage focuses on legal defense. Option D pertains to first-party coverage for property and hardware recovery, not liability for data breaches. Question 19. Which of the following entities is primarily responsible for setting the standards for cybersecurity in the insurance industry in North Dakota? A. The North Dakota Department of Insurance. B. The Federal Trade Commission (FTC). C. The National Institute of Standards and Technology (NIST). D. The North Dakota Cybersecurity Council. Answer A. Explanation. The North Dakota Department of Insurance is responsible for setting the standards and overseeing the insurance industry within the state, including for cyber insurance. While NIST provides national cybersecurity guidelines, the Department of Insurance has regulatory authority over the insurance industry in North Dakota. The FTC enforces privacy and security regulations but is not the primary body for setting standards within the insurance industry. The North Dakota Cybersecurity Council may have advisory roles but does not set regulatory standards for insurance. Question 20. Which of the following best describes network security coverage under a cyber insurance policy? A. Coverage for third-party damages caused by a company's data breach. B. Coverage for the cost of restoring lost data after an attack. C. Coverage for financial losses due to system downtime caused by malware or cyber attack. D. Coverage for the costs of monitoring employee internet activity to prevent breaches. Answer: C. Explanation. Network security coverage typically includes protection for financial losses resulting from system downtime caused by cyber attacks such as malware or ransomware. Option A is third-party liability coverage, while option B is data recovery coverage. Option D refers to employee monitoring, which may be part of internal security practices but is not covered under network security insurance. Question 21. Which of the following best describes the privacy liability coverage under cyber insurance policy? A. Coverage for the loss of income due to a cyber attack. B. Coverage for the costs related to notifying affected individuals after a data breach. C. Coverage for legal costs and settlements related to the loss of personally identifiable information, PID. Coverage for the costs associated with replacing damaged hardware. Answer: C. Explanation. Privacy liability coverage is designed to protect businesses against legal costs and settlements that arise from the loss or unauthorized access of personally identifiable information, PI, during a data breach. Option A refers to business interruption coverage. Option B is related to data breach notification costs, and option D pertains to property insurance for hardware. Question 22. Scenario-based. A North Dakota company has suffered a cyber attack resulting in the theft of customer data. They have a cyber insurance policy with coverage for forensic investigations. The company hires a forensic firm to analyze the breach and determine the cause. Which of the following is most likely covered under the policy? A. The forensic firm's costs to investigate the breach. B. The company's lost profits due to the attack. C. The forensic firm's employee overtime expenses. D. The company's costs for public relations to manage the breach's reputation. Answer: A. Explanation. Cyber insurance policies often cover the costs associated with forensic investigations to determine the cause of a breach. This coverage helps the business understand how the breach occurred and how to prevent future incidents. Options B, C, and D may be covered under different parts of the policy, business interruption or reputation management, but they are not the primary purpose of forensic investigation coverage. Question 23. Which of the following would be a reason for a North Dakota company's cyber insurance premium to increase? A. The company implements multi-factor authentication (MFA) and encryption. B. The company experiences multiple data breaches in a year. C. The company switches from a cloud-based server to a local server. D. The the company improves employee cybersecurity training programs. Answer B. Explanation. Multiple data breaches in a year increase the risk profile of a business, which would likely result in a higher premium. Option A. Implementing MFA and encryption typically lowers the risk, which can reduce premiums. Option C refers to shift in server infrastructure, which can have an impact on security but isn't the primary factor for increasing premiums. Option D improves overall security and would not result in a premium increase. Question 24. What is a network interruption clause in a cyber insurance policy intended to cover A. the cost of recovering lost or stolen data, B. the costs associated with business operations being interrupted due to a cyber attack, C. the legal defense costs associated with a third-party lawsuit, D. the expenses related to upgrading a company's cybersecurity systems. Answer B. Explanation. A network interruption clause covers the costs associated with the interruption of business operations due to a cyber attack, such as system downtime or loss of access to critical infrastructure. Option A refers to data recovery coverage, option C to legal defense costs, and option D to cybersecurity upgrades, which are not covered by a network interruption clause. Question 25. Which of the following actions can help reduce the likelihood of a cyber insurance claim for a North Dakota business? A. Failing to install security patches regularly. B. Implementing strong access control and multi-factor authentication (MFA). C. Avoiding cybersecurity employee training programs. D. Discontinuing the use of encryption for sensitive data. Answer B. Explanation. Implementing strong access control measures and multi-factor authentication (MFA) is an effective way to reduce the risk of a data breach or cyber attack, which in turn can lower the likelihood of a cyber insurance claim. Option A increases risk and would likely raise the chance of a claim. Option C and D also increase vulnerabilities, making the business more susceptible to cyber incidents. Question 26. In the context of cyber insurance, what is a security incident as defined by most policies? A. Any failure of the company's hardware systems. B. A breach or compromise of sensitive data by unauthorized parties. C. A customer lawsuit resulting from a data breach. D. An internal audit that finds vulnerabilities in the system. Answer B. Explanation. A security incident typically refers to a breach or compromise of sensitive data, such as when unauthorized parties gain access to the company's systems or data. Option. It pertains to hardware failures, which are usually covered under different policies. Option C refers to legal actions, not a security incident itself. Option D refers to an internal audit, which does not necessarily indicate an actual breach. Question 27. Which of the following types of cyber attacks is most commonly covered by a cyber insurance policy's cyber extortion coverage? A. Phishing attacks targeting employees to steal login credentials. B. A ransomware attack that locks a company's data and demands payment. C. A denial of service DOS attack that overloads company servers. D. A data breach caused by an employee's negligence. Answer B. Explanation. Cyber extortion coverage is specifically designed to cover incidents like ransomware attacks where attackers demand payment to release the company's data or systems. Option A refers to a phishing attack, which may be covered under other parts of the policy. Option C relates to business interruption coverage, while option D pertains to general data breach coverage. Question 28. Scenario-based. A North Dakota-based insurance company is reviewing its cyber insurance policy after experiencing a major data breach. The breach exposed clients' personal and financial data. What should the company do first to comply with both legal requirements and its policy? A. File a claim with the cyber insurance provider to trigger coverage. B. Immediately pay for credit monitoring services for all affected clients. C. Notify affected clients and regulatory bodies as required by law. D. Begin the process of legal action against the perpetrator of the breach. Answer C. Explanation. The first step in responding to data breach is typically to notify affected clients and regulatory bodies as required by privacy and data protection laws. This is necessary for legal compliance and helps mitigate damages. Filing a claim, while important, follows after the breach notification process. Paying for credit monitoring services and taking legal action may come later in the process. Question 29. Which of the following would likely be excluded from coverage under a standard cyber insurance policy? A. A breach caused by an employee's inadvertent mistake. B. A cyber attack that exploits a known vulnerability that the business failed to patch. C. Costs related to public relations efforts to recover the company's reputation. D. Business interruption due to a ransomware attack. Answer B. Explanation. Cyber insurance policies typically exclude coverage for breaches caused by known vulnerabilities that the business failed to patch or secure. Businesses are expected to maintain basic security practices, and neglecting them can lead to an exclusion from coverage. Options A, C, and D are generally covered under most policies. Question 30. Which of the following best describes the term cyber risk in the context of cyber insurance? A. The risk associated with physical theft of office equipment. B. The potential financial loss resulting from a cyber attack or data breach. C. The risk of a company's employees being targeted by phishing emails. D. The risk of third-party lawsuits due to a security incident. Answer B. Explanation. Cyber risk refers to the potential financial loss or damages a business may face as a result of a cyber attack, data breach, or similar cybersecurity incident. Option A pertains to physical security risks, not cyber risk. Option C is a specific type of threat, but not the overall risk. Option D refers to third-party liability, which is a component of cyber risk, but not the definition itself.